What's up, everybody? Welcome to another edition of Dave's Daily Dives, where I take a look at all things the stock market, look at the major market indexes, and try to give you some key levels for the trading day ahead so that you're armed with info when you see that market bouncing around. So for a while here on the S&P 500, I was using the big fib. Not a big lie, but the big fib. What I mean by that is the November lows to the March highs. Well, now we're in a whole new world here, and I've drawn a fib from the April 13th low to the recent high. This is going to give us some perspective here moving forward in the short term. You can see the big gap down, terrible day yesterday, followed by a bounce today. Now we did take out yesterday's lows. That's a little bit concerning. Didn't close up anywhere near the highs, about 10 handles off the high at 23.65 and change, below the 50-day moving average. So the market's still under some pressure here. We're not out of the woods yet, okay? But you didn't need me to tell you that, right? So a very key level for you guys to keep an eye on for tomorrow is 23.58. And then, of course, the 50-day moving average, which is up here near 23.70. So those are a couple levels to look out for. And then, of course, up here, this 23.76 level should the market rally further. So those are really your areas that you should be keeping an eye on when it comes to the S&P 500. Now for a little stronger index here, this is the Nasdaq Composite. Done the same thing. Now the Nasdaq has just been on a run basically since June of last year. Just an incredible move for the Nasdaq over that period of time. You've had a few retraces, right? But nothing all that serious. Coming down to the 50-day a couple of times, most recently in late April. But we're going to do the same thing here, where we're going to go ahead and zoom in on this and use the April lows to the all-time high. If you notice, the Nasdaq's retracement here hasn't been as deep as the S&P's retracement was. So where on the S&P, we were talking 61.8% retracement levels coming into play. Here on the Nasdaq, the 50 barely came into play. And today's low, right about 6,000, well defended, came 50 points off of that throughout the course of the trading day. So again, another case where we're not exactly out of the woods yet, but key levels to look at, 6,000, I guess, is the no-brainer here. And then keep in mind this 23.6% retracement at 60.87 on the Nasdaq. So a couple of more key levels for you to keep an eye on. Something else to keep an eye on, though, is the VIX. The volatility index had a huge day yesterday, spiked 46%. Today, he got a little bit of follow-through initially, but then that began to subside. And the VIX closed the day at 1466 today, okay? So overall, down from yesterday, historically pretty low. And you typically get more than like a one-day spike in volatility, right? It usually takes a few days to work itself out. Now, yesterday was VIX expiration, so it was just kind of primed. Like the situation was there. It was ripe for something to bounce around a little bit, and then that's what we had happen. It's funny. I love it when you apply, technical analysis. As far as I'm concerned, technical analysis on the underlying VIX in terms of, commodity channel index doesn't really hold that much, but it just gives you some perspective as to how quickly it moved and how overbought it may have become. And look at this. You got a commodity channel index up in the 400s. Not something you see very often. Not something that's going to influence my decision in either way either. Just funny to see as far as, you just don't see that on normal charts. So VIX under 15 now already. Market already normalizing. Very short-term memory here on the markets. But that doesn't mean that one headline, one tweet, one thing can't set this in the other direction. Another index I really want to look at is the Russell. So this is the small cap index, and I have this chart divided with this nice little blue line on the left, and this shows the post-election day move, 20% in a little over a month. Pretty crazy stuff. But since then, we've been in an extended consolidation on the small caps of the Russell, the higher beta small caps here on the Russell, basically bouncing around these two levels. And if you're looking for a level to be concerned with on the Russell, it's 1335 on the Russell, providing the downside support. So that's what I would worry about. Keep an eye on that. That's about 25 handles away from where the Russell closed today. So you still have plenty of cushion to the downside, even if this market continues to sell off. So that, I believe, is where the next war will be waged in the market as far as the Russell is concerned, at least. So you have that, okay? Now, I'm not just going to leave you hanging and give you these big macro views and not give you actual actionable items that you can take a look at. So we're going to look at 5 Zacks Rank #1 strong buy stocks right now that you need to at least consider, take a look at, maybe some stories, maybe some trade ideas for you here. The first of which is American Tower Corp, ticker AMT. Now, you don't typically expect a REIT to go from 103 up to 127 in that short of a period of time. This is just since February, so a quarter, and it goes up that much. That's a lot to see from a REIT, I understand. Of course, interest rates have moved a little bit. Maybe not enough to justify all this, but remember, this is a Zacks Rank #1 strong buy. So that means there's an underlying earnings estimate revision story that's happening. I know that sounds thrilling, but what I mean by that is that analysts have come out and increased their earnings estimates, so maybe that is justifying the move in the price here. Okay, so that's something you need to look at. This is Zacks Rank #1 strong buy, American Tower Corp. Now we're going to go to a Chinese internet stock. That's CYOU, ticker CYOU. An interesting pattern that's developed here on CYOU. Stock bottomed out in the beginning of the year, flirted with the top side of the 50-day moving average here in late January and early February, and then hung out underneath it in mid-April, and really over just the course of the last couple of days, surging higher, breaking out from 32 all the way to 36 and change. Obviously, the commodity channel index is very overbought here. I'm going to move these to put these things in perspective for you. Commodity channel index, very overbought, showing that this thing is hot. But the good news is the Shiken money flows crossed over the zero line here in mid-April and have continued to not just be positive, but push higher. So that confirms your overall trend here and lets you know that this thing could have some legs. That's ticker CYOU. eHealth is the next stock I want to look at, ticker EHTH. Long-term sort of consolidation here, then a breakout to the upside, getting all the way up just under $18 per share right now. Again, another situation where you have a crossover the zero line on shaken money flows, staying positive. Commodity channel index a little bit overbought at 69.81. One pattern that I like to play is waiting for the CCI to get down to the zero line when stocks are at or near their 52-week highs, and then that's when I go ahead and re-enter a long trade or enter a long trade for the first time if I haven't done so already. So that's what you might want to take a look at. Let it run out of gas a little bit, come back to a more favorable position, and then boom, you can load the boat when it gets to the zero line. That's eHealth, ticker EHTH. Then, not to be confused with Teletubbies, it's TeleTech, ticker TTEC. Skyrocketing, really. Coming out of this sort of $29 range, gets above 30, leapfrogs the 50-day moving average, and then it's just been off to the races recently, almost getting all the way up to 40. Again, a situation where money flows have been positive for quite some time, so that could have been a hint early on. Commodity channel index still overbought here. Wait till pull back to the zero line, and then I think you have a much more favorable entry just in case this thing runs out of steam. But you're talking 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 days in a row being up. That's a pretty spectacular run, up about 33% for TeleTech, ticker TTEC. Last stock is kind of boring amidst all these tech stocks and Chinese tech stocks and things that we've got going on here. It's Unilever. But a big, really elevator to the upside here for Unilever. Makes a smiley alien face. Of course, I guess it didn't look so smiley there. Big jump higher and then found a base and then broke out more. Found support again and then continues to go higher here. 50-day moving average providing plenty of bullish support here to the downside. So this is all good, but take a look at money flows, and they turned negative in March and have continued to be negative while the stock is going positive. You know what that means, my friends? That's a little bit of bearish divergence happening on the chart for Unilever. So I'd be a little bit careful, maybe look to take profits, and maybe even look to get short a little bit. But remember, these are Zacks Rank #1 strong buy stocks. So what that means is that earnings estimates have been ticking up in a positive direction. So you may not want to jump out ahead of it, but it's also not maybe that compelling to just load the boat on a stock like this, given that money flows have been negative here recently. All right, folks, that's all I got for you here today. Remember to follow me on Twitter at Bartosiastics so that you can get Dave's Daily Dive along with all of the other videos that I do, including those live earnings previews and trading sessions. Today's was all about Deere, ticker DE, so I got it all there for you on Twitter. And then, of course, all the wonderful stuff I do for Zacks.com. So thank you so much for hanging out with me here today on Dave's Daily Dive. I will see you all mañana.